Perm or Perm? Hi everyone. Sometimes people ask me, should I buy life insurance? And if so, what kind? Well, what kinds are there? In theory, there are many types of life insurance, many different life insurance policies out there to choose from. But right at the beginning, we can boil it down to two very specific options. One, term insurance. Two, permanent insurance. Permanent? Something that's going to last forever? And when you say term, what kind of term are we talking about? Well, the reason those are two very specific types of policies is because term life insurance lasts for whatever term you generally want it to, although, again, depending on which life insurance company you want to go with, it's possible they won't offer a specific term that matches your needs exactly. The most common forms of term life insurance are 10-year term, 15-year, 20-year, 25, and 30-year terms. Generally, what's happening with any one of those is that you're going to buy a life insurance policy. You'll pay a premium for the term of the policy, and if you happen to die during the term of that policy will pay the stated death benefit. So just pulling numbers out of the air here, if you have a 10-year term insurance policy with $1 million death benefit and $1,000 a month premium, if you pay that policy for 10 years, that would be 10 times 12, 120 payments of $1,000, and you don't die, then you have just written a check to the insurance company for 10 years and seen no benefit. However, it's possible you'll write two checks, $2,000, and die the next day, at which point you get $1 million, or your family anyway would get $1 million. Your beneficiaries, whoever they may be, will get $1 million in the case of term insurance. In the case of permanent insurance, they're going to charge you more from the life insurance company because they're going to assume you're not going to keep that for a set amount of time, 10, 20, 30 years per se. They're going to assume you're going to keep that until you die, or likely until you die anyway. They're going to have some actuarial assumptions on the people who won't end up keeping that permanent insurance until they die. But the point is, overall, the assumption is going to be a longer period of time than a term insurance product. So they're going to charge you more because they're going to assume you're going to have that life insurance for a longer amount of years. Permanent insurance may include some other factors such as a accumulating cash value, a savings factor inside of the life insurance product that may be available to you down the road as a useful tool for drawing on for income or for needs in the event of a big expenditure down the road. But that should be dovetailed to an overall financial plan. The most important part when it comes to this is that if your life insurance needs are very much based on the death benefit, the least expensive way to purchase death benefit for yourself is likely going to be term insurance. If you want a savings vehicle attached to it, that's when you would probably start looking more towards permanent insurance. Or if you're sure you're going to need that death benefit well into your 90s and even into your hundreds, you may also want to consider permanent life insurance. If you have further questions about that, feel free to give us a call at 941-951-0443 or shoot me an email, jeremy@wealthenjoyment.com.